Good morning, everybody. It is Tuesday, March 25, just about 5 a.m. over there on the East Coast. I'm having a little bit of a rough reaction today, so I'm going to make this quick. Futures, we got extremely overbought yesterday, but you had no dip. And I'll show you that in a second because we're not going to really spend too much time on this. But this was the first time that we have gotten overbought since this correction began back on February 19th. First time that we have gotten overbought. So are we due to really believe that Quad OPEX Friday and the, 30, 40 point range that we had, the little bit of a squeeze, that we finally stopped printing red weeks on not necessarily the Dow, but on the ES, on the NASDAQ, on the Russell 2000 after, 4 or 5 in a row, or 5 in a row over on the IWM, the Russell, that all of a sudden we're, back in bull land because they're going to be selective about what tariffs they put and with who? I don't think so. The bounce, we knew it was coming, but this is a time here in a period where you need to be really careful about your upside exposure, and I will bring you on to why. Let me drop this down, or no, I will simply just move on over. Here, I'll start you out with the SPX. 100 points close. That is not bullish. That kind of volatility like that is not bullish. I'm sorry. That's just the way that it is. Our range is getting smaller, but that's because we had a 50-point gap up, just like we had back here, back on March 12th, right prior before we put in the low. 50-point gap up. We are back above plus 10% year over year. So again, this is something that I mentioned before. I am going to continue to monitor to see how everything, plays out. And something I'm playing around with, which I do not have any kind of confidence in because I'm still trying to learn this, is the Fibonacci spiral. And everything is kind of actually timing out pretty well right now, where March, we started on March 13th, the low. March 16th, we put in the high, 57.03.52. March 18th, the low, 55.97.76. Yesterday, or not yesterday, March 21, so we had slippage, 57.75.14. March 21 was on Friday. High went in today, or yesterday on Monday. Theoretically, March 26th, we should see a low. So again, with the gap up that we have and how it is, I'm monitoring this. Again, I am not putting any kind of extreme confidence into it, but I am monitoring it for now. But anyway, speaking of it from a low, I'll bring you on to the QQQ real quick. QQQ, big huge day, plus 9.82 close, plus 2% day. Almost filling that gap, 491.79, 491.71. SPX, mentioned it all day long. All day, that 57.70.20 gap, 57.70.20 gap. Well, you filled it. IWM, not necessarily any kind of gap that I believe was to be filled, 205.95. I am wrong. Anyway, 205.95, that was filled last week. That I recall. But IWM, actually, call it what it is. IWM is sitting in a position where everything gets perfectly lucky and goes its way. It could fight for a green month. Could. I don't think it will, but it could fight for a green month. So anyway, that's just a quick view over there on that. That's your futures again, and I will bring you on real quick over to your charts. SPX, looking at March 7th high, 57.83.01, back up to it. Right, almost perfectly back up to it, but again, the 200-day moving average, after 10 days of having been below it, finally retracing back up to it. And I shared a couple of weeks back the view of when we lost the 200-day moving average the last time, which was at the end of October in 2023 when Israel invaded Gaza. We fell down below it, and it took us almost 10 days before we recovered back up to it. So from our game plan of what we were looking for upside, we're all dead spot on, right on board. On the bounce view, off of that 55.04.65 on the SPX, this is not yet in any way, shape, or form a bullish signal. having retraced the 38.2 retracement, 57.50.19, almost coming to where A, B, C equals A, right here at 57.99.98. Almost. It's not bullish, but it is a bounce. It's exactly what we wanted, but it is not yet bullish. Come back over onto the chart and the drawing that I put up some fucking hieroglyphics as to what I expected the move to be. Dink, dink, dink. Well, we got that dink, 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 and I'm not going to move these lines right now, but you got your dink, you got your, here, you got it right here. Dink, dink, and here is your donk, okay? Dink, dink, donk. There it is, but I was expecting that that move would take us up to the 50-day moving average. It still can. This could be just the A wave. Then we could get our B wave to the downside, somewhere to fill that gap, and then take our C wave back up there to that 50-day moving average that was expected. So it's still on the table, but this is just very cautious here as far as having yourself exposed to the upside blindly without knowing anything of what's going on, and I'll show you why as well. QQQ, again, almost filling that gap, 491.79. Me personally, what I'm having as an alarm is if this should break below 485.84. Breaking below that would be my first signal to call bullshit on this bounce, as the QQQ has not recovered to the 38.2 retracement because it had such a deep decline, and it has not recovered to the 200-day moving average. All that it did was come up and fill that gap from March 7th. Looking at it from a dink, dink, donk, almost perfect, 491.82. Almost perfect, 491.82. So a lot of caution out there. This needs to be extended. Excuse me, I apologize. And we put it out. So you got your two gaps from, since we put in the lows back on Thursday a week ago. But caution when it comes to the upside, and I'll bring you on to that real quick. Dia, boom, boom, boom. Again, nothing burger, back up to the 2024 close. We said 421, then 425. We got 421, now we got 425. Now we wait and see whether or not this is legit. Over on the IWM, massive recovery back to 208. And now you're having problems at 208. You see your 208, 209, 210 area right over here from back on Monday, Tuesday, and Wednesday after that sell down from March 3. This was the March 7 week before you collapsed. We're right back up into that zone over there. So, yeah, I would expect heavy-duty resistance over here at 208 with the death cross already having taken place over on the Russell 2000. So I think that's all that I need to do over there on that. And I will zoom you over to, here we go. And this is my left 55-inch TV. So I will share you over here. Dow Jones. This is a 4-hour time frame. And as you can see here, be concerned. Be concerned. Back over here was the last time you were overbought. Back over here in January 20th. So be concerned. As you can see, overbought never, ever, ever means that you have a top in place. It does mean that you need to be very careful about exposing yourself and getting in a new position to the upside. Come over onto your NDX, and again, the same thing. NDX, boom. Last time you were this overbought was when you were screaming overbought just prior to the drop on February 19th. And here we are again. First time that we've been here. Come back over to your SPX, and you are not yet overbought, but you are getting very, very close to giving yourself a big warning that, hey guys, there needs to be something behind this, or else this is all a big pile of bullshit. And over here on the Russell 2000 as well, again, Russell 2000 doesn't really have the screaming monster indicators that you have over on everything else, but as you can see looking down there on the bottom, just this embedded buy divergence that we had going on for the better part of 2 weeks before we actually got that move to the upside. So caution when it comes to that, and I will leave you off with the 1 hour, looking at the SPX on the 1 hour time frame as far as what I was saying yesterday. Warning, warning, you are starting to get overbought. Warning. Over on the NDX, the same thing, a little bit louder. Warning. Starting to get overbought over here on the 1 hour time frame on the NDX. So again, for upside, be really careful with what you're doing. As far as the downside goes, I still see this as a pretty simple game as we go into this week, and I'll show you here on the SPX, and I can actually bring you out here into a 5-day. I'm expecting this gap to get entered into. That's me. I'm expecting the gap to get entered into. I'm expecting to get a little bit of a dip, possibly even filling the gap all the way to 56.67, although that would make this a 100-point range week, which is pretty standard. However, because of that dink, 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 donk, and the donk target being up there at 57.99.98, I'm expecting that to be seen as well. So I'm expecting downside over here, possibly filling the gap to 56.67. I am also expecting upside to get up there into that 5800 range, where if we are into that 5800 range, to zoom you out, we have a big fat gap, unfilled gap, right up here, 58.12, 58.42. So buckle up, Buttercup. You had a couple of easy weeks. Everything was pretty hunky-dory. And now, suddenly, as we go into Taco Tuesday, ahead of GDP and PCE on Thursday, as we go into the new moon, as we go into the end of the month and the end of the quarter, you're actually going to have to do some trading.
'Cause it's Taco Tuesday.